As we heard about those long talked about and now formally announced, at least there will be a study. But the plan is to put on those reciprocal tariffs on our trading partners. Let's bring in Dubravko, Lakos, head of global market strategy at JPMorgan. He's with us here, as you see, at Post 9. Is that your takeaway as well? Yes, a lot of tariff talk. Nothing really implemented today, and that's why the stock market looks the way it does?
Yeah, I think you summarized it very well. I think there's a lot of pre-positioning that's taken place around tariffs and around the uncertainty there. So I think a lot of books have been sort of hedged, especially when you look at the long-short side. When you look at the momentum factor, people are hiding in a lot of these, call it high-quality names. So I do think that there's a bit of a coiled spring in the market, not the market overall, but especially a lot of these, call it laggards and value segments of the market that I think could start to work quite well if we start to see that the situation on the tariff side is not going to be perhaps as bad as feared.
What happens if, though, we have a more pronounced trade war of sorts? You know, they come back with a report. Secretary Lutnick gets confirmed as Commerce Secretary, gets the report on the president's desk by April 1st. He implements them shortly thereafter. Then it spurs a whole bunch of responses from our trading partners around the world. Volatility.
I think you're just going to get increase in volatility, and I think that's going to be a challenge for risky assets, and probably in that environment, market is going to have a hard time squeezing higher. And if anything, you could see some pullbacks. But again, I think the bigger question still remains on the economy and the fundamental side, the demand side, which, from everything we're seeing, remains a pretty robust picture.
I mean, we're pretty resilient, wouldn't you say? And the reason being, I would think, is because earnings are delivering to a degree that some may have doubted they would. And you could make the argument that they really had to deliver, and that trumps everything else right now.
So I think earnings, and I think there's still room for earnings to surprise to the upside.
Even from here?
From here, I think because you're seeing still a very strong nominal growth environment. And I think the terminal growth rate for the U.S. generally, if anything, has been squeezing higher. And for as long as the Fed doesn't spoil the party and start moving into some form of hiking process, for which I think that's a pretty high bar for the Fed to get there, you have this sort of period of, call it reflation, which I think bodes well for stocks and for earnings, and a Fed that still remains relatively, not constraining the environment. Liquidity remains ample. Availability on the credit side still remains quite ample, and
pretty amazing. I mean, we're only 9 points or so on the S&P from a new closing high. Would you have thought that would be the case if we're talking about tariffs every day? You had a couple of hot reads on inflation. The Fed is backed way off its plan of cutting numerous times this year. That doesn't seem like it's likely at all. And here we are on the doorstep of yet another closing high.
Yeah, I would have thought that maybe there would have been a bit more of a pullback, that you've seen more than just like a 3-4% pullback. But I don't think that so far that really changes the big picture. We do have a price target of 65, which I would say is lower versus the street, to some extent reflecting the fact that we could enter a period of uncertainty tied to tariffs. So yeah, we've been in a period of digestion, I think, right now. And given the shift, not given the uncertainty on the tariff side, but also given the shift in expectations around the Fed, yes, the market has been pretty darn resilient.